life is for living. And I think, we can really miss the whole point of everything. And that's why at the end of the day, like it doesn't matter. Like we'll grow our brand, however it's going to grow. We're going to reach a lot of people to be great, but I want to live a life that's content and it's of peace, right? That really helps people for sure.
Welcome to The Real Deal, a commercial real estate investing podcast. I'm your host, Aman. There's a ton going on in the world right now, and much of it impacts real estate investors. The Real Deal podcast will take a look at what's happening and how it influences you as a real estate investor. Each episode is a 20-minute segment dedicated to distilling the day's most important news, so you can stay up to date on what's going on in the world and how it might affect the commercial real estate market.
Welcome back to another episode of the Cashflow Capitalist Show. Today we have a very special guest. He's my old friend, Bronson Hill. Hey, Bronson, welcome to the show.
Hey, Aman, great to be here, man. Really excited to be on the show. I've been following you for a while, and you're doing some big stuff, brother. Appreciate you.
I think I'm following you for a while. Remember?
Yeah, no, we met at a meetup, man. We met at a real estate meetup, and you were super interested in all of it, and you just took massive action, man. So well done. I'm really
thank you so much.
A lot.
So tell us about yourself in 30 seconds, who you are.
Okay, so well, when it comes to business and stuff, we raise money for real estate deals. I'm a passive investor. I'm an active investor. We started out with multifamily. We've got about $200 million in multifamily assets. We've raised over $35 million for their multifamily. We're also into ATM machines and car washes and oil and gas, some other alternative stuff as well. I have my company's called Bronson Equity. We also run a meetup in Glendale, California with a bunch of investors. And that's a little bit of what we do.
I think that's the place where you met.
Yeah, that's right. Yeah, we did. We met there, and you've never been the same.
So how did you get into real estate?
So I got into real estate. I knew I wanted to be a real estate investor. A lot of people that I know became wealthy, or you just see people that have done very well, and they left their job, or they've got a bunch of houses, whatever. So I was like, I want to do that. And so when I was in my 20s, I had bought a single family house, ended up moving. And so it became a rental. It worked out okay. And over the years, I developed a small single family portfolio. And in the process of doing that, I realized, I wanted to scale up more, but it wasn't really cash flowing. So I wasn't really aware of syndication or bigger deals, but I had a relative who had been doing, larger syndicated multifamily for a while. And they said, why don't you do multifamily? I said, I'd love to, but I don't have the money. And so he said, well, you can raise them. He said, you can raise the money. So that's basically how I learned about multifamily, and then just started the meetup with Christina here in LA, and I met my first investor there. Short time later, 6 months later, connected with a partner, and then we started raising a bunch of money together. And so it's just been a fun journey. It's been really fun to see, okay, that feels impossible. How could somebody leave their job with real estate? How does that even happen? And then I did it, and I was like, oh, well, that's really cool. But so it's just neat how you can break your own mental barriers just by moving forward and taking, one step in front of the other.
And when was that when you left your job?
There's kind of a range of how people leave jobs. I've had now over 1,500 one-on-one phone calls with high net worth investors, and it's always interesting. But just a chance to interview people, and there's people that all kinds of different people you talk to. But some people are like, oh yeah, I'm a month shy of retiring, and I left my job with passive income, and they left. I was like, okay, that's great. You can hold on, that long. Other people are like, they hear about a deal, or they hear about multifamily or a mentorship, and then they quit their job and take out debt and go do a mentorship, which I don't recommend. But some people do this, and they just burn the boats, and then they do fine. And some people don't do fine. But in general, there's different ranges of that. So what's the right time to leave your job? So to me, I had enough passive income or recurring investment income to leave my job. But I didn't know what's the right time. And so I was going to leave right about the time COVID happened. And I was actually kind of upset when that happened, because I was like, man, I was going to leave my job, but it actually worked out well. It allowed me to hold on for about another year, just kind of generate some more income, some more cash flow, some more investments. So, I think, leaving the job it was challenging at the time because I'd never done it. I didn't have any relatives that are entrepreneurial. And so all my family was like, why would you leave your great job? I was making $200K a year doing medical sales. They're like, why would you leave your great job? That's great. And I was doing like 20, 30 hours a week, And so people were like, why would you ever leave that? And then I had this group of entrepreneurs that I met with every once a month for a year. And it was like 5 or 6 of us. And they looked at me, they heard about how my business worked. And they were just like, oh yeah, you should leave your job pretty much as soon as possible. And it may not work, but maybe it will. And if it doesn't work, you can always go back to medical sales, right? And I kind of like, it's kind of kept me going, right? I don't want to go back to medical sales, but if I had to, I could, right? So that's just, but there's a lot to that, for people interested in leaving their job, it's fun when people do. And it's just, everybody's story is different.
So you were making 200K per year. And how did you take that action to leave your job? Like, it's not easy to 200K.
Yeah, it's hard. They call it the golden handcuffs, right? You're getting paid so much that, well, how could you leave or how would you leave? But I think what you do is I realized that I had somewhat of a flexible job, which was nice. So I could do, I was doing 40 plus hours. And then I kind of went from being a rock star sales rep to being, okay, I'm not as great of a sales rep, but I'm still doing the job. And then I would take, maybe one day a week, or I'd do calls. For a while when I first started, I had a partner, and over an 18-month period while working my job still, I was doing these phone calls. So I had over 1,000 one-on-one phone calls while working a full-time job. So how I did it is I do them early. I do them at 6 in the morning. I do them at noon in the car. I do them at 3 p.m. in the afternoon, driving back from these places in the valley where you live, where I drive back. I have windshield time. So I just kind of do stuff when I could, and I'd hustle for a while, and I'd go to events, and I just kind of do things whenever I could. But what I realized is if I dialed back at my job, now not everybody has the ability to do that, right? It's harder for some. Some people can't go part-time. And for me, I kind of effectively did it while I was still working. So it was hard. I had to kind of coach myself that it's okay if I'm not excellent in this area of medical sales, right? I've been excellent. I've won awards. I've done different things, but it's okay if I'm not excellent there, because where I'm really going is over here. And so once I kind of coached myself through that, it was actually much better. But it was still kind of scary, because it was like I didn't want to lose the job. But then when I was ready to leave, it was kind of like it kind of all fell into place, and it was like, okay, I think it's actually time, and it felt good to actually get ready to leave. So that was good.
So when you left your job, when you got into multifamily, what kind of real estate experience you had at that time?
So I had been doing, like I mentioned, the single family rental for years, and then had some single family rentals in another area. Um, when I left the job, I had raised about $20 million. So again, I had this partnership that we worked together for a year and a half, and it was somebody who had a huge brand, huge platform. And I was able to come along and just basically help them to raise money, right? So they went from having trouble to raise money to where the last deal, we raised $8 million in 24 hours. And just the deal filled up super fast. It wasn't me, it was the team, and it was kind of all of us together. But we raised so much money that we kind of realized, I think, they realized as well, is like, hey, we're paying Bronson so much to do this. Like, he's getting so much in equity from doing this work. Why don't we just hire like an investor relations person? And so from there, then I decided to launch my own deal. I launched my own website, launched my own stuff, my own podcasts and webinars. And I just kind of tried different things to figure out, well, what's really going to work here. And the nice thing, when you have a job, you're still getting income. And so you don't have to really worry as much about, okay, how much am I actually getting here? So you're saving money, hopefully. And then when I actually left, then it was like, okay, now I got to make sure that my monthly cash flow is there. And that's the thing that I think a lot of people don't really think about when it comes to leaving a job, is that I think cash flow is way superior to long-term appreciation when it comes to leaving a job or retiring, because you can replace your mortgage, you can replace a car payment, you can replace living expenses, all of that through cash flow. But when it's you're going to make a lot of money someday, well, that doesn't really help you, right? And then you want to reinvest in other things too. So that's why we do a lot of cash flow investments now, is just because I think that's what really allows people to leave their jobs. And when we see people that do, we celebrate it, because we're like, dude, that's awesome. And now I've got the freedom, like we were just talking before the call, like in a couple of days ago to Japan, right? I'm going to New Zealand later this year, and I think New Zealand will be my international trip number 6 this year, I think. Right. So like, I love it. I love that I can be able to do that. And so it really, when you have financial freedom, it allows you to live the life you want to live, to create what you want to create, spend time with the people you want, go where you want to go. And it just opens up things for you, for sure.
So if I ask you this question, like, what is your why?
Yeah, I love that. I love you asked that with like a smirk there too, man. You're like, what's your why? I think you probably heard this, but I've got a few. I mean, my big, hairy, audacious goal, my big why is to end modern day human slavery in the world. There today, 2023, there's 20 to 40 million human slaves today. There's a movie, Sound of Freedom, came out recently. It's not, that's not exactly how human trafficking looks, but there's elements of that, right? Where people, it's just hard to even fathom that, 3 times the size of the greater Los Angeles is, somewhere around the world just enslaved. And so that's my big, I'm involved with some causes there. I also want to be a great dad. I want to be around for my daughter. I want to, create to I really want to help people to become financially free so they can discover their why. And then, there's a lot of pieces to it, but I feel like, and when it comes to my faith and who I am, I just feel like we're here for a reason. We're here for a short season. And at the end of it, it's like, well, what are we here to do? Right. And I think it's the idea of having a purpose. There's the proverb that talks about, without vision, people perish. Right. So if I don't have a vision for my life, then I'll just kind of be existing. And you see why people, I think a lot of times get depressed or they go through things or they make poor choices because there's no vision, right? So you've got to really wrestle and get the vision for your life. So for me, those are some of the big things for sure.
So if we talk about vision, so I saw many people like, what is the vision? Oh, I want to be rich. And they are the one who was more depressed.
Yeah.
So where do you see, is that their vision wrong or their goals are wrong? What are they focusing on?
Well, I think, that's a really good question. And I think money is very spiritual. A lot of people think of money as just its only material, but money basically, it really shows us what we value, right? It shows us really, people sometimes will, and I have a friend who says this, he says, never use people to make money, but use money to help people, right? Or you can use it for people. But if somebody's purpose is simply, I call it the yachts and Mai Tai lifestyle, right? You get to live the life, you're out there doing all this stuff. And, I travel and there's nothing wrong with that. It's fine. But if that's the end all, it's empty. There's really nothing there. And I think that's the challenge with life is we don't realize, when we have everything we want, everything we need, there's so much depression, so much, there's a ton of people that just have no sense of vision for their life. And you can have everything, you can play this game. And so that's where I think it's with financial freedom. I think it's what financial freedom allows you to do is that hopefully it gives you time freedom that you can, even in the process while you're discovering, hey, what am I here to do? What could I do that just gives me passion in life and I can make a difference in the world and I can make a difference in my family and all that stuff. When you do that, what happens is it begins to open up these new possibilities for you. And I think if you don't continually try to discover that and hone that and be there, you'll get to the end of your life and you'll say, man, what was this all for? Like, what was it? And it could be, we don't know. Like it could be next week. It could be in 60 years. We don't know how much time we have. And so that's the thing that, but I do think that just for people, if you're only seeking the money, you will end up empty at the end of that because there's nothing there. It's just like, it doesn't make you any happier. It doesn't make you any more fulfilled. In fact, it actually will, a lot of movie stars and like, musicians and stuff that have made it, actually, this was a couple years ago, Kate Spade, who was a billionaire, was worth like, I think $1 billion or $2 billion, went and took her life.
Yeah.
Right. And we don't
Yep.
know, there's mental health, there's other things, but I think a lot of it's tied into that. It's just purpose and what we're here to do for sure.
Yeah, that's beautiful. And I also heard this thing. I don't know who said it. If you are not helping others, you're not living.
Yeah, absolutely. Yeah, no, it's if you're, I mean, really, it's there's Zig Ziglar has this quote too. He says you can have everything in life you want as long as you help enough other people get what they want, right? So it's kind of like if you're willing to help people, and that's why people, they get angry at, oh, how is Elon Musk worth all this money, and what about Bezos and all this. Well, these guys have created tremendous value. My life is better. I mean, I just order stuff from Amazon, all the time, right? It makes it way better. I don't have to leave my house. I can just order stuff and it's so much value, right? So
Yeah.
I think we people should get paid for creating value and for really helping others. So I think, but anyway, I think for people that are achievers, which I think I'm an achiever, I think you're an achiever as well, is that we can sometimes get in the chase for money and forget what it's all for and what we're really doing.
And in the end, we just needed a food and a clothes. That's it.
Yeah, exactly. Yeah.
And people are depressed because they want more. It doesn't mean they need more.
Yeah, exactly. Yeah. Well, and the human appetite, I mean, there's no end to whatever we have. We do have this weird thing though, that like as human beings, like we don't realize what we have until it's threatened, right? So I could complain about this job that I hate, that I go to, whatever. And then all of a sudden you lose it and you're sitting, I have a good friend, this happened to him and he lost his job. He got laid off during COVID and he was unemployed for like a year, right? And he was just like kind of really depressed, right? He didn't realize this job he had that he had this long commute for, or whatever. He's like, oh, he would have loved to have it. Now he's got a job and he's doing great. But I don't know. I just think that, yeah, the human nature is we don't realize what we have until it's threatened or it's taken away. So it's again, when people go through it like a health crisis or they get to the end of their life, a lot of times it's those really simple moments, right? If somebody's ever lost a child or somebody's been through cancer treatments, whatever, they start to experience a little more of a wonder about life, right? Like, well, what would it be like just to go back and have another hour with that child, or to have just to have life in this way, or to go back to that garden and walk through and experience it differently. So I think life is for living, and I think we can really miss the whole point of everything. And that's why at the end of the day, like, it doesn't matter. Like, we'll grow our brand however it's going to grow. We're going to reach a lot of people to be great, but I want to live a life that's content and it's of peace, right? That really helps people for sure.
And you're meant to live, not survive.
Yep, exactly.
And if you talk about the real estate at this point, investment at this point, how, if you go into like more like investment strategy side, how do you evaluate the proper, like, how do I say, potential multifamily properties or high cash flow properties? How do you like underwrite those kind of deals? How do you find those kind of deals?
Well, it's interesting. I just had a conversation with an investor earlier today about this. Multifamily's changed a little bit. It's gone from being, much more. You can do anything basically from like 2012 to like 2020, and just if you owned, like, you were in pretty good shape for the most part. There were some cases where that wasn't the case. These days, especially the last 18 months since rates have started rising, we're seeing, it's hard because rates have risen, which, if you have bridge debt, I think it's like 80-90% of multifamily is through bridge debt, and there's, the interest rate caps, but usually you're at the cap. What that's done, though, is that's lowered the valuations of a lot of these places. Even if you've done a value add strategy, you've had lower valuations. So I think, for me lately, I've been looking at stuff that's less sexy in the multifamily. So we're doing a lot of cash flowing stuff like ATM machines and car washes. We've got an oil and gas deal, a couple of oil and gas deals. So we've got a bunch of stuff that's just like really heavy cash flow, which we love. But I think when it comes to multifamily, we're looking at stuff that's just much, much more conservative. That's like, 50% loan to value, some loan assumption, fixed rate for the next 7 years, a 3.5% interest rate or something, and lower returns. So instead of maybe we're looking at 15-18% conservatively, now we're looking at 10, 12, 13%, right? And we feel like there will be more upside with that of having long-term fixed debt, being able to weather whatever is happening the next year or two, because we think there's going to be some more, I don't know if crisis is the word, but just it's going to continue to look challenging until rates go down again. So I think just being in stuff conservative, they say there's two things, right, in investing. One is capital preservation, and the other is capital appreciation, right? So the most important is capital preservation, right? Just don't, rule number one, Warren Buffett says, of investing is don't lose money, right? And rule number two is don't forget about rule number one. It's just, if you just don't lose money, whatever you do. So I think in general, we're looking at stuff that's just a little more stable. I found in general real estate, particularly multifamily or commercial stuff, it's harder to find cash flowing stuff these days. There are deals that are outside of real estate, like ATMs or car washes, or other things that are cash flowing great. And so we're doing those things too, for sure.
But I'm seeing so many operators, they're still buying multifamily. They're still saying 8%, 7% preferred return. How are they finding the deals?
Yeah,
What kind of deals are they finding?
Well, the challenge, and one thing I learned kind of early on in doing, multifamily investing, both as a passive as an active, people can say whatever they want. Oh, we got an 8%, we got a 7%, we got a 10 pref, whatever. And it doesn't mean anything. It's just like, oh, if we have money, we will pay you this amount. And if we don't, we'll just catch. So people can say whatever they want. So you could have a 12 pref and it could not, pay out or not pay out, whatever. But, at the end of the day, I'm not saying there aren't deals. There are deals out there for sure. For sure, there are deals out there. So I think you just have to look and say, look at the sauce. What are they actually putting together? Is it something that, are they being very conservative, right? And a lot of, especially new operators, I found they'll find, well, if a 18% IRR is great, well, then a 22% is even better, right? But then I found really seasoned investors, they tend to just be like, well, I don't know, like, I'd rather have something that's much more conservative, and then maybe like there's additional upside. I'd much rather have a 12% expectation and get paid 16% than be, looking at 22 and then get 16 later. Because then you're, on both levels, as an investor as well as an operator. So I just think it's an expectation thing. And again, I just, the way we've structured it is try to be less sexy on the returns and just, try to, really perform better for sure.
Yeah, less return and more stable. That's better. And
Yeah.
if I underwrite a deal, if I say like, oh, 20 IRR, I would be like doubtful. I'm like, maybe I did something wrong.
Yeah.
I will go back. I'm like, I don't trust this thing.
Yeah. Exactly. Yeah. No, it's interesting. It's really interesting to see, how things change over time, both in the market as well as how you approach it for sure. Yeah.
And so, do you believe we're gonna see some sort of distress in the market in like in 1 or 2 years? A lot of multifamily property deals in the market.
I think, I mean, in reality, I would say there's some distress right now. We're starting to see some distress right now. There's deals that we have one deal that's struggling a little bit, but we're starting to see it in the market. We're starting to see people that, I talk to investors like, oh, I've had multiple cash calls already, capital calls, and, we're hearing about it. So it's happening. People are starting distress funds or things to go in to try to, buy properties cash or find a way to just, get things to get a hold of these properties. I think there'll be some opportunity. I mean, the challenge is like, it's all like, I look at this season right now and it's like, if you can manage your real estate and you can hold on, I think it's going to be just fine. I think it's going to turn out pretty well, but we don't know how long will rates stay elevated, from a sort, to go from basically 0% interest to, 5.5% over an 18-month period. That's a very sharp, steep increase. And it has really affected a lot of people. And there's just no way that you could have really forecast that, except unless if you got the right type of debt. So I think that, I think there will be opportunities. I also am one of like, well, should I sit on cash for 12 or 18 months or 24 months? I don't know. I think I like more interim investments where you get, you invest now and you get some money back along the way, and you can kind of find things to cash flow with in the meantime. Because, people don't realize that, real estate from the 2008, 2009, kind of the Great Recession, it started coming down actually 2006, 2007, and it didn't hit the low point, at least in Los Angeles, which is kind of faster than other areas. It didn't hit the low point until first quarter of 2012. So we're talking like a good 5-6 years before it actually, after a crisis, right? So real estate does not move like stocks. It doesn't move kind of as quickly. So I'm doing finding other things to cash flow with. I'm still doing some conservative real estate, and I think there will be opportunities, but I don't think it's going to be in a year or two. I think it's going to be like, it could be a few years. People say, hey, why would you, there's a lot of the people that kind of burn out of doing real estate, and you're like, hey, it's a great time to get in here, right? But then the issue at that point is raising money, right? Because then if a lot of investors, the sentiment is lower, the sentiment is lower now for real estate in general, but people still have to figure out what they're going to do with their money. And I think if you're leaving it in a bank, there's a big risk of inflation. I think they say it's 3.2%. I think it's 10 to 12% if you look at shadowstats.com. So there are, there are some challenges there, but I think I think there will always be opportunities in real estate. You just got to know where to look and continue looking, for sure.
And I still remember. Maybe you don't remember. I asked you about your Jacksonville deal. You were like, we bought it for 27 million. After 1 year, we sold for 37 million. I'm like, you could hold it for longer. But I think that was the right step.
Hey
I
man,
believe that.
you get money in the bank, somebody's willing to
Yeah.
make you an offer you can't resist. It's like, I'm happy to take wins like that. I mean, that was to investors. That was, I think, over a 90% IRR, it was in 10 months, which was awesome. So we'll take those all day. We'll take those wins. And, the challenge sometimes with whether it's stocks or investments is, when do you sell or when do you cash out, whatever. And it's hard to tell. Sometimes you end up on the right side of it. Sometimes you're like, oh, it would have been nice to sell it a little while ago.
Yeah.
There's been those
But
as
I
well.
think that was the right step. Like, you sold it and you got another deal. Perfect.
Yeah. 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 And that's the goal, is keep rolling in new deals for sure.
So, when you talk to a new passive investor who never done any deal passively or not even in the single family side, how do you explain to them how they can make money out of this thing? What are the benefits of real estate syndication? How they can learn? How they can, what kind of tax benefits they can get? How do you explain to them?
Yeah, so we have a number of things we do. We look at how we work with our investment community as we're educators. So we're just teaching people how this stuff works. We don't, there's two kind of thoughts of sales. And when you raise money, you really are in sales, right? I had 10 years of sales experience in medical, and but there's people that hunt, where they like, I got to go find the money, and they go chase it down and go shake the trees and call everybody they know, whatever. We don't do that, right? We're basically, we farm more than we hunt, right? We basically just keep putting things out there. We find our value. We put out ebooks. I've got a book coming out called Fire Yourself, Replace Your Working Income with Passive Income in 3 years or Less. That comes out later this month. And just we've got different things that we're doing to try to help educate. And we feel like that is really a way to just continually, almost as like you're watering a plant or you're waiting for the fruit to get ripe, right? And then when people reach out, like we have a deal going live today, and when it goes live, people, those that are interested or the fruit is ripe, they will reach out, right? We don't have to go try to shake the tree or anything, but I think in general, this is for anybody who's raising money or anybody who's even a passive investor, is those that really can add value, those that can really answer the questions that people are asking, those that can really say, hey, I own a business and I'm going to sell it, and how do I reduce my taxes or eliminate my taxes? How do I develop cash flow so I can leave my job? People can answer questions that people are asking. Those are people that, when it comes time, hey, I've got some cash here, or hey, I'm interested in investing, but I need to get educated. They'll reach out. And so it's been amazing how you, just like with this show, when you give things out for free, then people start to look at you as somebody and they connect with you for whatever reason, right? Because of where you live, your background, your work stuff, the way you talk, whatever it is. People just connect with certain operators, certain groups. So I think those are things that we try to cover. People have a different background and experience. Some people have been doing it for years. Some people are brand new. And I think it's just people approach it wherever they approach it. And we have to say, okay, somebody's never gotten into this type of thing. So pretty basic conversation when we have a call around syndication versus somebody who's done 20 deals and wants to talk about cap rate inversions at exit and other things. This could be a different type of conversation, right? So
Yeah.
interesting.
And how do you build the trust between the passive investor and you?
I think, again, just going back to that point is trust is built through somebody who's received value. Now I want to share this. There's a guy that actually, one of my former partners that I had met. I'd never met him before, but when I had met him, this was like 5 years ago. I had, gone up to him and say, "Hey man, how's it going?" Whatever. I'm a little gregarious, as you know, Aman. I'm a little gregarious sometimes. I show I'm a little bit excited, whatever. And I show up, and this guy, like, he was a little like taken aback. He was kind of like, well, he didn't know who I was. I was just some guy who was really excited to talk to him, right? But I thought about that. I thought about that a lot. That I had spent hours and hours and hours, probably like 20, 30, 40, 50 hours with this guy through his podcast and through his social media and through, like, so I feel like I knew him, right? He didn't know me, but I feel like I knew him. So that's kind of the idea of like the one to many, right? Of how do you, so when I had that conversation, I already kind of knew I trust this guy, right? I like this guy. I like what he's doing. I want to be involved with it. So I think when we start developing rapport, and there's friends that I know. I had a friend tell me the other day, and they're like, Bronson, I know you pretty well, and I know you would never do something to intentionally hurt somebody. Like, I know that, we've been friends for 5 years, and this is somebody, they're a friend, they're not an investor, but you're just saying, like, I know you well enough to know this about you, right? And so that's kind of how it comes. Like, you don't think of it, but like when you do your show, you do the podcast, like, people really feel like they get to know you, and you're providing consistency simply by your presence, as well as just you're putting out regular things. And when you do that, it's like, oh, this person's just continually doing something consistent, right? So we've been doing our stuff now for, with Bronson Equity for 3.5 years or something on my own, and or maybe several years, almost 3 years. And it's been fun because then people follow, and then they share it with people, and then, oh, you heard of Bronson, whatever, and then people get referred, they'll do the same with you. And so I think I think rapport just happens over time. And then when people have a good experience investing, when they invest and they're like, oh, this has worked out really well, then I can be like, oh yeah, well, that's great. And then we get a lot of referrals. People refer others. So when somebody's referred, like when you're referred as the guy, right, or the gal, you're like, oh, here, you need to talk to Aman. He's the guy, right? Like, well, that's easy. You just kind of get on the phone. If they're ready to invest, they'll invest. If not, like, so referrals are huge, right? If somebody's had a good experience, those are all things that, help over time, adding value. And just really, reputation is huge. So always trying to treat people as well as you can. And it's not even things are always going to go perfect in your deals. They're not, but just being forthright, calling people back, being willing to, go the extra mile, and just, being a person of integrity. That stuff goes a long way. And word does get out of what kind of person you're working with, I've noticed over the years.
And what is your average raise size? Like, how much would you average for any particular deal?
It varies. That's one thing that's really hard to predict. We've had deals in the last 12 months that we've raised 3.5 million for. We have a couple of them around 3.5 million. Some we've raised less than $1 million. So it varies. It depends on the asset. We're doing a lot of alternative things now. So we're doing a lot of ATMs and car washes and oil and gas. So some of those, if it's a new thing, like we started our first car wash deal a while ago, and we raised a little less than $1 million. We're really excited about that one, and we know the next one will probably be bigger. And the ATMs, that's typically between 1.5 million and 3.5, kind of in that range. So it just varies. It just varies on whatever the asset is and what you're raising. But um, yeah, it is hard to predict though, because if you're starting out, someone will ask you like, "Oh, hey, man, like, how much can you raise for this?" And you're like, you kind of close your eyes, look up at the sky, and be like, okay, maybe this much, right?" And you don't know, and it could be way more, it could be way less. But if you're in the beginning, usually it's less than what you thought. Usually, you think you've got a million. Usually, you've got like a few hundred K, maybe. But it varies. Some people have an experience. I know people that for their first deal raised a bunch of money and it worked out really well for them. So I think it varies, but yeah, so it's a range for sure.
How much was your first raise?
My first raise, I raised $100,000 from one investor. I had started the meetup in LA that you came to. It was before you'd come to it, but it was the first meeting. There were 60 people there. We promoted it a lot. Um, Before that point, I had 62 phone calls and conversations with friends and family, or right about that time. I think it was shortly before and after I'd had that many calls, but none of them invested, right? The only guy that invested was a guy who came to that meetup, saw me in the front of the room, and saw me as a leader in the space. Again, there's a difference between being an expert and being a leader. An expert knows all the subject, everything. A leader is just leading the room, right? So you can be that's something too. A lot of people can be doing something that creates value just by leading the room. So I was doing that, and he kind of came up to me and said, "Hey, I'd invest in one of your deals." I was like, "Are you talking to me? Are you?" And so we got coffee, and I showed him a sample deal of like, here's what a deal would look like. And he's like, "Yeah, I'd invest in something like that. I'd put 100K in." So then I found another guy at that same meetup who had a deal, who was reputable and been doing it for 10 years, and he was looking for money. So I basically connected the two of them, right? So that was my first deal. And that was 225 units in Texas, right? So some people think like a lot of times with single family, if you come from single family, you think like, how in the world could I ever do? It's just numbers, right? And it's such a partnership game. With single family, it's like you can do a lot of it yourself. Maybe a property manager, maybe you've got a broker or an agent or something. But with multifamily, you can't. I mean, to do 100 units or more, you can't really do that by yourself. It's very, very difficult to do it by yourself. You'd need a team. And so the nice thing is when you offer, hey, I can work with the capital side and bring funds, and I can also do some diligence, or I can put some of my own money in, whatever. That's a great way to get going. Or if somebody's more of an operator, has that type of experience, but it is such a team game when it comes to multifamily.
Yep. And how do you keep your pipeline going for the raising the capital?
I mean, just the same thing that I was saying is just we continue to try to put more value out there than we ask for. So Gary Vaynerchuk, Gary V talks about this. He's got this book called Jab, 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 Right Hook. Right. So you're just like value, 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 and then you ask. But you want to make sure you add a lot of value before you ask. And when you ask, you don't want to ask in such a way, hey, do this right now, whatever. Like, you got to realize every ask you make, it's almost like a bank account, right? You want to have way more money going in there, way more value going in there than what you're ever asking for. And hopefully, when you have an ask, hopefully it's something that people really see the value of. So we've done this with syndicated deals. We usually do a couple of emails for that, but we try to really make sure that on a weekly, even daily basis, we're putting out way more value than we are asking for anything. And so that's why sometimes it's okay, not doing deals for a few months and just continue to put stuff out there. No, it doesn't pay as well, right? you're actually paying to do that, right? You're paying your staff or your team or your video editing, whatever. But at the end of the day, you're providing value. And I think a brand and a reputation is so valuable. And if you just try to do the right things, the right activities for consistent, long period of time, it will benefit you for sure. And it will benefit everybody else as well.
And you're also doing another conference in LA. Can you talk
I
about that
am.
too?
Yeah, we are. Yeah. So
I'm
myself
excited.
and a partner, we're doing a conference called the Advanced Real Estate Investing Summit. It's a national conference. It has Ken McElroy, David Green from the Bigger Pockets podcast will be there. We've got Neil Bawa. We got a whole slew of speakers, and it's awesome. So we're starting to fill that up. That's at aresummit.com. And if your listeners, for you, Aman, just for your listeners, if you use the code Summit20 at ARE Summit, so with the letters ARE Summit.com, you can save 20%. So we're really excited about that event. It's going to be a lot of fun. And we do a lot of meetups. This will be the first conference that we've done, but it is a national conference in LA, and it's right near LAX. You can fly in really easily. Or if somebody lives in LA, there's going to be a lot of great people, a lot of great networking there as well.
And I saw like many of the people don't want to do any conference in LA. Why did you choose LA?
Yeah, I live in LA, so there was a conference here for a little bit. I think, you can do conferences different places. A lot of people do them in Texas. I feel like the Dallas people are spoiled. They get more like, real estate investment conferences, meetups like than anybody else in the pretty much the world. It's the mecca of multifamily. But I think, there's a lot of people on the West Coast that want to be involved in something like this or would come out from, and we got people coming from the East Coast to this event, right? So I think just, it can be done, and it's something that we wanted to do, and we're going to do it again. We're planning to do it again next year. We're going to have, instead of, 1 day, 1.5 day event, we're going to try to do a 2.5, 3 day event. And we're excited, right? So we just want to continue to create value. And there's something that happens that you don't get when you're in the room. When you're in the room with others, you find a way to create an event that really is valuable. It can really open up a lot of doors for sure.
So before we wrap this up, I'm going to ask you one more question. So what advice do you want to give to somebody else who's starting into real estate, who's new into real estate?
Well, I think there's a couple of different paths. One somebody can be active or they can be passive. And so I think either, whether you want to be active and manage stuff yourself or be involved in stuff like you and I do, or you're doing deals, or you want to be passive. I think that the steps are really the same initially. Is that the two things that really help people grow are, first, networking, and the second, education, right? So networking is going to events, going to conferences, going to meetups, meeting people. You never know who will be in the room. You never know. I mean, I met partners in the room. I met people that invested passively. It's incredibly valuable. And then the second thing is the education, right? So networking and education. So you're gonna learn so much about what's happening in the market. You're gonna learn what, if you come to our event in October 19th and 20th, you're gonna learn about, what are some of the smartest people in the world think about what's happening right now. Just the questions you're asking about, is it a good time now or should I wait a little bit? And there are people that answer that question both ways, right? Or have different thoughts on that. And so it's really important to get in, and then even I come back from, conferences, I always ask people, what books are you reading, or what other conferences are you going to, whatever. And you get so much information that you would not have gotten. So I think going to events, going to meetups, most cities, even mid-sized cities, have some sort of real estate meetup. So if you search on meetup.com or just search online, you can find in your town or your city, likely there will be a meetup. And if not, maybe within a couple hours, there'll be something.
Yeah. And what is your morning routine as an entrepreneur?
That's my morning routine. Well, we can do a whole show just on this one. I have some affirmations that I do in the morning. I do, let's see, I have some affirmations. I have some spiritual practice. I have kind of a God story thing where I remember kind of how, with my faith, how I feel like God's interacted in my life. I do some gratitude stuff. I also read my goals every morning. It takes me about 5-10 minutes, but I do all that. And then I take some time where I listen to, I listen to or read the Bible. So I do some of that in the morning as well. And then just kind of get focused for the day, just kind of look at usually the night before, I actually create a list, big checklist for the next day and the schedule. And just so I know, okay, what's happening tomorrow and am I all set up for that? And so I kind of plan it out the day before, just because it helps me to just kind of hit the ground to know what I'm going to do when I get going.
And if you have to go back and restart all over again, what would you do different?
Win the lottery. Just kidding. That would be nice though.
We all do.
Yeah, exactly. No, I think what I would have just done it sooner. I think I would have really done it sooner. I follow a lot of Warren Buffett's quotes, and he has this quote where he says, if somebody's young, let's say they're out of college, is find the person that you respect the most in the world, and then go find a way to work for them, or go find a way to shadow them, or find a way to just do everything you can to get around them. Even if you work for free for a couple of years, you will learn so much just by being around someone who's at the next level. There's actually a guy that did this. This guy, it's kind of a crazy story. There's a guy named George Gammon. I know you know George Gammon. He's I know. Financial guy. He's got a guy who works with him named Josh. Josh is 19 years old. And when he was 18, George's, his brand's called the Rebel Capitalist. So this guy tattooed on his leg the Rebel Capitalist. You know the story then. Yeah, I tattooed it on there. So then he met George in an event. Oh, I got a tattoo of the Rebel Capitalist. And George's like, what? Whatever. So then he saw that, and then he reached this guy. His name is Josh. He reached out to him a little bit later and said, hey, I'm going to be in. I can come to Phoenix or whatever where you're at. Can I meet you up for coffee, whatever? And he just pitched him on, hey, can I come work with you? I'll do whatever. I'll do it for free. I'll do whatever. So he just found a way to work with George. And now he's doing really well, and he's created all these little side hustles, and he's doing all these different things. So, I think just things like that. We underestimate the power of creativity And, we think things are not possible, but people do them. And we just watch how any door can open. And it's, my story is different than your story is different than somebody else's story. But, if we keep pushing, we keep trying, you're going to find, some door. Oh, I didn't even know that was a way in. Right. And so there's a really good book about this called The Third Door by Alex Banayan. I think it talks about there's the traditional, like if life were a nightclub. I'm not a big nightclub person. I'm sure you are, Aman, but if life were a nightclub, you have three entrances, right? You've got the one where you see the line a mile long, right? And everybody's like trying to get in and nobody, just kind of like a big long line forever. Then you got the VIP kind of celebrity entrance where they go right in the club. And then you've got kind of like the third door, which his point was like, where you run down the alley, you climb in through the kitchen window, you find the side door, you're like finding a side door in. And I think that, and he gives all these examples of really famous, successful people of like, there's always a side door, but we just have to keep looking to find it. And I think there's a lot of application for everybody starting out in real estate. So that was a pretty long-winded answer, but.
Oh, well, that was great. And if somebody wants to reach out to you, where can they reach out to you?
Well, for your listeners, Aman, I've got this gift. It's How to Use Inflation to Your Advantage. It's an ebook. It's like 52 color pages at my website, BronsonEquity.com, and they can download it for free there. I'm also on all the social medias, and we also have our investment club as well. But I appreciate you having me on. This has been a lot of fun, man.
It was great. And thank you so much, Bronson, for your time, for your knowledge, for your wisdom. And I'll see you tomorrow.
Sounds good, man. We'll see you at the meetup tomorrow. Thanks, man.
All right, bro. Thank you so much.
Thanks, brother.
Bye.
Thank you for joining us on The Real Deal, a commercial real estate investing podcast, the show that covers everything to do with multifamily real estate investing to help you become an expert in your real estate ventures. We're here to help you create passive income and financial freedom so that you can achieve what you want whenever you want. We'll catch you next time on The Real Deal.